Good morning, Kristen.
Good morning.
You look very nice today.
Thanks.
I already lost my mic again. What the heck?
Goodness.
It just never ends. I think we're going to have to, do it the alternate way here.
Yeah, there you go. That's perfect.
Put that down there. Hopefully everybody can hear me.
Yep.
How's everything?
It's going good. I think we're, a couple days away from being under 100 degrees.
Oh my gosh. Yeah. You don't want to be here, but I guess you don't want to be in Florida either right now.
No, it's so bad.
My dad's in Florida and he's leaving today, so I'm like,
are they still doing flights out?
He's in Boca Raton, so he's on the East Coast. So they're gonna get hit a little bit later. So it sounds like he's gonna be able to get out. There's been a lot of canceled flights. My brother-in-law, he's in Fort Myer, but he got out a few days ago. So
yeah,
that was.
Well, I've heard about they're running out of gas. They're doing this. Some people are trying to bear down the hatches.
I have a friend in Tampa he says he's riding it out. I don't know. Well, it's all my New York friends ended up migrating down to Florida. So
yeah,
I got a lot of friends down there, people that I know. So hopefully everybody stays safe. And,
you're watching this, you're stay safe too.
Yep. We get the heat here. Maybe not the natural disasters, but except for those monsoons, they can get nasty.
136 days of straight 100+ degrees.
I'm ready. I broke out my boots this week and.
Oh yeah, taking them down.
Yeah, I did. Yep. Well, everybody, welcome back to our next episode of the Tax Sisters.
Yep.
And today we had kicked off a month-long series with our clients, actually, for tax strategies, for the end of the year. Because October is usually a good time where people will start focusing about that, getting close to the end of the year, not quite close enough to the holidays.
What can I do? How are things looking right now with my financials? Do you have any tips or suggestions? So it's kind of on our mind in the fourth quarter a lot. So we wanted
I think it goes with Halloween because Halloween's scary, taxes are scary.
Yeah, there you go.
Whatever.
IRS, scary.
So I think we launched our first, we sent out our first of those, and I think today we're going to talk about two of them. One, affectionately known as the Augusta Rule, and the other is going to be talking about how you can hire your children. Now, obviously, these are things that most people would use in their business. However, the Augusta Rule can be used personally as well. So let's kind of dive in and get that going. So the Augusta Rule.
So funny thing, my brother, he lives close to Augusta, so I do like talking about the Augusta Rule. His girlfriend actually works for the Augusta National Golf Course, so kind of makes me think about it.
Affectionately named after the Masters tournament.
Yes.
And held annually in Augusta, Georgia. This rule from the IRS, nicely called the Augusta Rule, was born out of a history of homeowners out there during the week-long tournament. And it's a week or 2 weeks that people would flood into Augusta, Georgia. They didn't have enough hotel space and all of that.
It's still a
big problem.
Yeah.
So people were renting out their homes for the week to get more people to be able to stay in there. And, some people just opening up their doors to help out. Some people leaving town and just renting their home. There was a lot of complaining going on because, they were trying to help out, but then they would have all this income from renting out their homes. So over the years, lobbying and all that, we got what's called the Augusta Rule now, that in a nutshell, we like to say it allows you to rent your home up to 14 days a year without having to report the income on your taxes.
Yep.
Sounds great, right?
Does sound nice.
So people out in that area were able to rent out their homes for the time being of the Masters tournament and stuff, and some would rake in $1,000 or $2,000, and they would just not have to report that as income. So it was nice for them. Now, how that's kind of expanded and evolved and how we use that has really come to benefit a lot of small businesses.
Right.
So why is that? And that's what we're going to talk about.
So a lot of the business owners nowadays that take advantage of it, and we see it a ton. I think when I talk about things around my phone listens to me and then shows me 50 correlating videos So when we were planning for this episode last night, I saw like 50 TikTok videos about the Augusta rule. But it's very widespread that business owners are now renting their homes to their business.
Yes. Now, there is some rules around that you need to be aware of up front. It's not any home.
Yeah.
So it's not a rental home, an investment property, your vacation home. It is your actual primary residence only. It only applies to your primary residence. So in that regard, you may rent your primary residence to your business and not have to have an expense for the business, but not have to report it personally. And that's where we get that kick, that benefit.
Other things that are regulated is you can't charge whatever. You can't just say, oh, I'm going to charge $4,000 a day. It has to truly be like at a market value rental price.
Correct. And it depends on what you're doing, right? So you'll see, like your TikTok videos are probably all like, just say you rented your house for 14 days, people run off, they like put that, as a deduction. But we want to show you how to do it properly.
Right.
So let's make it
safely,
more audit proof, really think about what does your business need to rent space for. It may be for team meetings, your office space, or you have like us, we have a lot of remote employees, but if we all come together, our office space can't accommodate that. We don't have the space to host team building meetings or business planning meetings and stuff like that. So we may resort to, in the past, we would get these little meeting rooms in hotels.
Yeah.
And we'd have, our workshops, and we'd go through, what are the tax changes, education, whatever we're trying to do.
Future planning, we did all those kind of things.
Exactly. But there's not a lot of those hotels around that really rent these types of space, and it gets harder for small business because of the competition and the cost.
Yeah.
We're directing is people can use their own homes, rent that to their business. The business would pay them for renting the home, but they don't have to declare that income, but the business gets the expense.
Right.
And depending on what you're using the home for, maybe, like you said, we're having a big workshop, how much space do you need? How many people are going to be there? That's how you have to gauge what you rent it for. It's not like a room in a hotel room is $220 a night, but a meeting space for, 10 hours a day that is pretty large with, AV or whatever you're going to be using, audio, video to do what you're doing, are going to cost different things. They can cost $500 a day, $1,000 a day, things like that. So what we advise people is if that's what you're going to do, you want to have the date that you're renting it to your business, what you're renting it for, because sometimes you may need a lot of space. Sometimes you may need a little space. And then comp that out to what you can find in the open market that those are going for. 500, 1,000, whatever that is. And then you can use those and that documentation to substantiate the rental of your home to your business. And that's what's really key is that substantiation. Good luck trying to get. That's not something I really would advise trying to get in arrears, like in an audit for 5 years ago, because no one's going to give you those types of quotes and and whatnot. And it's just a simple.
I think about like even now, my daughter's soccer travel team is always like, okay, when we get there, we need to have meetings and stuff like that. So we have to inquire at the hotel, like how much is this meeting space, and and those quotes, even just the email substantiation is good enough.
Yeah. So I usually tell people, let's, the documentation of the dates you're renting it, what the purpose was for, then getting, as many as you can, but like 3 different quotes to back it up. But I would say a minimum of 2, not just 1, to be able to substantiate that and then save that with your documentation so that you ever get audited on that home rental, then you have that documentation to back that up. And it's that simple. So the Augusta rule has been really nice for small business, to be able to really leverage their own space.
Right.
Plus not have to, report. I get a lot of people be like, well, I own my home. I'm just going to rent this or I'm going to rent the office back. They don't realize that it's two-sided. You may have an expense on one side, income on the other. So it's been a really nice way to offset personally, not having to deal with that income.
Yeah. But no, I think it's becoming more and more widespread, and it's a totally above the board deduction. That's why it's gaining more traction out in the space. It's just making sure you're taking the proper steps to safeguard those deductions.
Right. So just giving you guys an example of how you might use that. Say, we can use our company for an example.
Sure.
A basic service industry, could be lawyer firm, consulting firm, whatever. Maybe you have a small office, but you have a lot of remote employees or clientele even that you need to meet with and, give demonstrations to and so forth. In that regard, then you would rent your house. In our case, I think in the past we've found justified maybe around $500 a day or something like that, but it depends on the size and the space. Document that. Now, when you do that times 14 days, that's $7,000 a year in additional tax deductions that you can then take advantage of on your business.
Right.
Versus nothing, because people are probably doing this already, using their primary homes and not taking the deduction or the compensation or putting this in place. And it's really just about making sure that you do the right things and check those boxes and get the documentation and you're off. So that's could be a pretty solid deduction for a lot of people.
Oh no, for sure. I mean, just one thing after another in regards to tax planning is what ends up compounding, right?
Correct.
So you got to think about all the different strategies you can take advantage of.
So it's a really nice, often overlooked one, or people hear about it, they're not sure. It sounds a little corny, may not be legit.
Yeah.
I think the way some people present it, it does sound kind of corny and not very legit. But it is, and it's a good one, and I highly recommend that if that's something that works for you in your business, that you would take advantage of something like that. Talk to your tax professionals, make sure you have the right documentation.
Especially if you're going to be renting out space anyway.
Or using the space anyway for no cost. Right, exactly. So great little tax strategy there that small businesses can use. So we wanted to explain a bit how that worked.
Yep. What was the second one we were going to talk about today?
We're going to talk about hiring your children.
Yes.
Which I think people hear probably more about that one than, they'll read, people say I can hire my kids. I don't know what that means, and do I have to give them a W-2, and what do I have to do? And hiring your children can be a bit more complex. There is a tax strategy.
Yeah, a little bit more branches and a little bit more legwork that has to go through to make sure.
Well, that and also it depends on the type of entity structure you are.
Yeah.
So we're going to touch on a few because there is a lot of complexities to it. So I highly suggest if you want to do something like this, you do consult a tax professional, make sure that what you're doing for the type of entity you are is proper. But let's talk about kids and hiring kids and what might be normal age for a child to be put to work. And I would say like the IRS is typically on average when we see like case studies on it, usually say about 7 years old.
Right.
Maybe with the exception of your child serving as a model for your company, or they're your logo, or they're your part of your brand.
Yeah.
Then you may, there may be smaller children depending on,
like the Gerber baby.
Yeah, if you sell baby clothes and you need baby models, then, your
so
kid.
Be it.
Yeah. That there are instances where that does work. But you really need to think about that. But in general office situations, we usually see about 7 years old where you can kind of confidently put your kid to some tasks in your business. Right. So you want to think about first and foremost that what can your child help you with? I used to have my kids come to work with me during their vacations way back when I was first starting out, and my son, we used to call him King Stapler, so he would he would, back when we used to mail out all our organizers, and he'd sit there and staple. The other kid would stuff them in the envelopes.
Yeah.
You know, and then we'd go from there. So they did have a job. And the key is to, like, really, what are they going to do? Mm-hmm. Is it age appropriate? You have to be aware of your labor laws and all that. I mean, you're not going to put your kid to work for 40 hours a week.
No, of course not.
But why is this beneficial is really the question. And it's kind of pretty simple. You're taking your higher tax bracketed income,
right,
shifting it to a child either in a lower tax bracket or a no tax bracket, right? Mm-hmm. I mean, a child can make up to, what is it, 16,000? I don't remember what it is this year.
I think it's 14,000.
No, it's more this year. It's going up next year.
Next year.
It's going up. So it goes up every year. But once they're below that personal exemption, then, you know, anything below that, they don't even have to file a tax return.
Correct.
They pay no taxes.
Yeah.
So, I don't know, out here it's not unusual to have 4 or 5 kids. You know, put 4 or 5 kids to work, and
it's not unusual.
50 grand right there. You just tax sheltered, and that's pretty nice.
One caveat though, and I think a lot of people forget that, right? When kids are going through payroll, you can't ever opt out of Social Security and Medicare.
Yes and no. So you're correct.
Two different situations.
Two different situations, right? Yes. So in a majority of what we see in our, like, S corporations,
of course,
partnerships are a little bit more well organized, but S corps have a very specific clause that, yes, that even if you pay a child, you can't exempt them from Social Security and Medicare because they work for, like, a complete entity. The loophole on that, of course, is if you're a sole proprietor.
Right.
So basically unorganized, I don't know, we call them hobby businesses, but, you know, side hustles, but some people run fairly sizable businesses, landscaping companies, whatever. That are just sole proprietorships. So one thing that they do give us if you hire your child in that situation is they can be exempt from Social Security and Medicare. So there are benefits to that type of organization depending on what you're doing.
Right.
In an S Corp, different situation because you're going to give them a W-2. Mm-hmm. They're just exempt from income taxes.
Right.
Not Medicare and Social Security. So... yeah, it's quite nice.
And I think like we talk about with the Augusta rule, the substantiation is still the same, right? You still, like, in the event of the audit, you have to prove, what were my kids doing? Is it applicable? Was there like, you know, all those things. When did they work? It's normal things, just like a regular employee. Like, if you were to be like, when did this employee work? You got to provide pay stubs. You got to do all those normal things.
Yeah. So there is a lot that goes into this one for sure. So not one I would probably recommend attempting on your own without consulting someone.
For sure.
Mostly because you do need to consider the type of taxable entity you are, whether you're a sole proprietorship on a Schedule C, you're an S Corp, you're a partnership, you're a C Corp, whatever the case may be, there's going to be a different kind of hoops to jump through and things you need to do. I think the one thing that's consistent across all of them is what you were mentioning about, you know, documenting the job role.
Yeah.
What are they doing? You know, generally, what hours are they working or how many hours a week? What are you paying them? That kind of thing. And having all that justification down. But over the course of a year, paying your kid, you know, on their holidays and times off while they're in school to do some basic, otherwise daunting grunt work tasks is actually kind of be a lifesaver.
Mm-hmm. We found that, like, Mike, she's 10, right? Doing the things that we can't hire, you know, people out of college to do anymore.
Nobody wants to do it.
No one wants to do it. Like, get through all the filings, open all the mail. Like, no one wants to take that job.
Yeah.
So our 10-year-old...
Well, I'm ready to hire your son. He may only be 2.
Yeah.
But my little boy genius is...
so smart.
So smart. And
he can definitely be...
I think we need to hire him soon. So, yeah, he's so cute. I'm going to show pictures right now of him.
I know. Can we crop him in?
Crop him in.
Michael.
We're going to add that in there.
Yeah.
Because he's quite the smartest kid I've ever seen.
Yeah.
So...
But yeah, no, it's super widely used. It can be an amazing tactic. And like Deirdre said, especially here in Arizona, we have a very family-oriented population. So I know people who have 7, 8 kids, you know, making their own homesteads here in Arizona. But it's very productive, right? Even if it is like 16,000 for 3 kids, that's $48,000 a year.
Yeah, it adds up. It adds up quick. And in some situations can be, as a percentage of your income or your profits, quite significant. So really thinking about planning on that case, if you have a kid and you're not sure that would, how that would work, talk to a tax professional, understand what you think they can be doing to contribute to the business, what would be reasonable to pay them, and then depending on where you fall, how do you pay them?
Right.
It's an interesting thing that also has come across, as kind of attaches itself to this whole hiring of your children, is the fact that these S corps and stuff, when they hire kids, while they can be tax exempt and they can't be exempt from Medicare and Social Security, people are like, is it even worth it? That's like 15%. My tax bracket's not that much. Do I really want to even go there?
Right.
Well, there's this handy dandy little loophole there that goes around that too, called family management company.
Yeah.
Some of us or some of you may have multiple businesses out there, and your child may do a little here, a little there. This one's an S corp, that one's that. How do you handle all that?
All that, yeah.
Well, we set up what's called a family management company. Simple little disregarded entity that you manage, that sole purpose is basically employing your children out to your other businesses.
Right.
What's nice about that is the child then is employed by the sole proprietorship or the disregarded family management company, so they can get around Medicare, Social Security, and income tax, not to pay any of that. And these businesses don't have to pay employer side taxes. They just pay the family management company. So that's been growing in its use as well. We're starting to even see a lot more people with S corps and stuff like that use that tactic because that's another 15.6%. The employer side, your side. I mean, that's
a ton. Taxes and taxes. All
$15 every $100. So whatever that adds up to, when you're talking about 10,000, you're talking about $1,500. Like it all adds up.
Yeah.
And then even the cost of payroll and all of that. So you want to be sure the way you have that set up, you want to maximize the benefit. But when we start getting into family management companies and those types of kind of added on, definitely consult a professional, because
the tree's getting too big at that point.
I've seen them misused, not done properly, and
forgetting your obligations with the family management plan. Like, no matter what, and I tell people this all the time, people are like, well, why do I have to file that form? I'm like, the IRS has inundated us with frickin' paperwork. So if you ever think that you can do something without letting someone know, filing a document or filing annual documents everywhere, you are so wrong.
Right.
So
paperwork everywhere. I mean, we all know, just to do payroll, I mean, we have 3 tax returns per quarter for at the end of the year, plus your pay stubs you're obligated to provide. Your
California
W-2s.
has extra on top of that.
Yeah, California has extra depending on the state. So it's not just writing a check, people.
Yeah.
And we talked a little bit about that in our prior podcast regarding payroll. So these kind of all intertwine. I'm glad we're doing these kind of back to back here, because I think they're kind of related.
Right.
Absolutely.
Yeah.
But 2 very powerful strategies that small business owners, that many, I would say, 90% of them probably have the ability to take advantage of, and just haven't. So again, the Augusta rule, rent your home, primary residence only, for up to 14 days.
14 days.
To your business.
Yep.
But of course, with the proper
substantiation
and documentation.
Yep.
And the second
one is going to be employ your little kitties
to do
whatever your tasks. Last time our children were here, I had them all cleaning up these blinds. We got dusty in here in Arizona.
Yes, nothing like watching some little children
do chores at home and do chores at work.
But they get. But here's the difference. I don't know about your kids, but my kids, if I asked them to do something that's not at home, like if they work here, they'd be excited to I get to do it at work. But if they were doing it at home, it was like a punishment. So I don't know.
Dragging their feet.
Just bring them here. I guess they understand the value of getting paid. I don't know.
I guess.
But got to teach them young.
Yeah. And then the caveat onto employing your children is the opportunity to use the family management plan. But we definitely advise consulting a professional who can advise you, lead you, consult with you in the proper way so you are using it properly.
Yep. Well, next week we'll have a couple more tax strategies to talk with you about.
Yeah, we're going to bring forth the ones that we hear about the most. And I think that the ones that are underutilized, so people are getting more aware of maybe not the, because I think when people think tax plan, they think about this overarching, huge end product that they have to overhaul things to do. But there are things, like we talked about today, little things that can make a big dent to some people, right?
Yeah. I mean, yes, to a lot of businesses, it makes a big difference.
Makes a big difference.
If you're not doing any of these things, definitely consult a tax professional. Yep. And hopefully you find this very enlightening, and watch out for the next episode.
We're here to support you. Thanks for visiting us here on the Tax Sisters.
Yes. Thank you.
Oh, I got my back. I was sitting in the wrong. Frickin'